Hello friends, how high can interest rates go up to? What should we watch out for our investment? I would appreciate the viewers to like this video so that the YouTube algorithm can help to spread this video and my channel to more people who are interested in investment and trading. Also, I would appreciate that you will subscribe to my YouTube channel if you like my content. Thank you. Federal Reserve Chairman Jerome Powell shared that the economy is being driven by very different forces right now. It's not clear if the US economy will ever return to its pre-pandemic status, Jerome Powell said. What he actually means right now is that he does not have a complete understanding of what is happening on the ground, be it inflation data, be it Russia-Ukraine war, be it China's supply chain, decoupling from that of US due to the trade policies and various policies. But one thing is for sure is that Jerome Powell and Largarde, ECB chairman, had said and guessed that the days of low inflation are over, given what has happened in Russia-Ukraine war and what's happening concerning the US-China relationship and Euro-China relationship and all the developments globally. A look at the FOMC participants assessment dot plot. So what is the current Fed funds rate? The current Fed funds rate is 1.5 to 1.75%. But the dot plot is expecting Fed funds rate to hit 3.2% to 3.75%, very high level. In 2023, it was even expected for the Fed funds rate to hit as high as 4.25% and above the 4% mark. A very remarkable level that's not been seen for a number of years. With this expectation for the Fed funds rate, the market is not kind to a US equity, particularly the Nasdaq 100 and the tech equities in US. We're seeing that Tesla is down 43%, Apple is down 25%, Netflix is down 70%, and Grab is down 65% over a 6 months period. Is it the time right now to buy the dip in US equities? Right now remains the number one question to think about, with Nasdaq 100 down over 30% year to date. We'll look into the Fed funds rate projections, give an indication on when the Nasdaq 100 as well as US equities will bottom. We do know that a look at the markets do show that Federal Reserve may be even more extreme in its approach for Fed funds rates. At least this is what the market participants are anticipating and projecting. But ultimately, how far the interest rate will go up to is dependent on how the inflation rate will be at. This is an old chart, but if you watch my YouTube videos on food shortage ending and don't follow Warren Buffett's oil bet, you will note that my views on commodity prices, including food and energy costs as well. I did highlight in my video that natural gas prices are coming down and it may potentially accelerate downtrend. And you see what is happening right now is that natural gas prices has fallen from over 9 USD all the way down to below 6 USD and is currently at 5.4 USD, down 33%. Even heating oil price is coming down by 1.5%, 1.6% yesterday. Again, if you watch my YouTube video on food shortage ending, you see that I have mentioned that wheat price have broken 1000 USD. And as I warned before, once it broke 1000 USD, it continued the downtrend and is right now around 880 USD. But we do know that crude oil price is still holding above 100 USD. So what can we expect? My view is that oil price will break 100 USD and head towards 85 USD and probably move towards 65 USD if it cannot hold 85 USD. Yes, I do know Macron wants Biden on UAE and Saudi Arabia's oil capacity limitation within these 6 months, meaning that UAE and Saudi Arabian oil capacity are very limited and is unable to be raised significantly in order to let oil price fall. But is it really the case? And I also know about the halting of gas flow at France's second largest gas depot. Despite this, I believe there are many tricks out to US to get oil volume up. The question is, do they have enough motivation and determination to do it? Biden naturally will get more anxious given that midterm elections are coming in November 2022. With a couple of meetings left in this year, Fed funds rate hitting 2.5% to 3% is a high possibility. The next question is, will it hit 3.25% as per what the market is expecting? But then again, my view right now is that hitting 2.5% is likely. Going up to 3% is really dependent on market conditions. As for people who are into short selling US equities, I think one should remain very careful right now as the risk reward is not very good. At least I will not short sell at this level. As always, this should not be construed as any investment or trading advice. Thank you.